Hi everyone, welcome to another update on the stock screener. I wanted to give some background on this post here about bullish indicators for gold. So here is a list of bullish indicators and it's a very extensive list. So I think gold is going much higher, right? And we're going to take a look at all these indicators. We know the US dollar is breaking support right now. So that's happening and that's typically good for gold. Seasonality is pretty positive because we are currently in October, end of October, going into November. And November is typically a very good place to buy gold. So here you have the seasonality. November is typically a bottom. So gold should be going higher now. Shanghai premiums are also still at 2%. So here you can see the Shanghai premiums, and as you can see, we are currently at 2%. Yeah, 2%. So this is going back to 0% at some point, and gold should go much higher, above 2000. Lease rates are up. As you can see here, lease rates for gold are now at a high point, and when it goes back down, then gold should pierce 2000. COT report is also bullish, as you can see here. COT report is at the high end, a lot of shorts, a lot of short positions. So if these get unwound, then gold will go above 2000. And inflation is rising. We know that, especially with oil that is going up. So inflation has been rising. Rate pause. Yes, the Fed is going to pause at some point and even cut rates next year. And we can actually see that here. So on this chart, you can see the path of the Fed funds rate, which is going lower. And whenever that happens, you know what happens. If they cut rates, then gold typically goes up. Cut rate, gold up. Cut rate, gold up. Cut rate, gold up. It's always the same. It's always the same. Cut rate, gold up. Cut rate, gold up. So that's what's going to happen. Gold will go up. Inverted yield curve. We also have an inverted yield curve right now. And you can see that from here. We are still at an inverted yield curve, and that's the moment when you buy gold. So we are going to go above 2000. Minus sentiment is at the bottom. Nobody likes minus. That's very good because that means I will buy what nobody wants. So there's not a lot of competition for gold minus. So everyone hates gold minus, and now is the moment to go back up. China demand. Yes, we know that SGE deliveries are up. So China is buying, central bank is buying. The trend looks good. Demand for gold is higher. Also, Indian demand is up. Central banks are buying, yes. And GLD, we have seen a tiny bit of reversal. So even the West is now competing with gold. So a lot of bullish indicators for gold right now. And I expect gold to go up. So how do we play this? We play this as usual. We buy gold miners with high margins, high leverage, and low costs mines that have a very cheap valuation, a cheap enterprise value to free cash flow. And Mako Mining is one of those companies. So it has gone up a bit and then falls back to where it came from. So this is actually a buying opportunity, and market cap at 90 million CAD. So let's see 90 million CAD. Here we have US dollars. So 80 million enterprise value. Pretty cheap. We have an EV to free cash flow around 6. Not bad at 1950 gold. All-in sustaining cost at 1,100 and production around 45,000 per year. So not bad. Now, why does nobody like Mako Mining? Because they had some production problems last year. Production went down. Also, all-in sustaining costs were higher at 1,300, 1,400. The grade also went down. So these production problems made the share price go down. Now, what people probably haven't noticed is that in September, everything is back online. We have the highest amount of production right now. That's this point here. So I expect all-in sustaining cost to go back to 1,100 around this level. Grades have also gone up back to the 8 grams per ton level. That's very good. It's actually the highest grade on this chart. Recoveries were also back to normal. 85% recovery. So we had some problems here at 70%, another 70%. Now it's back to 85%. So if they can keep this up, then everything is looking very good. Tonnage was lower, but it's gone back up. Okay, so tonnage should be around 600 again. So everything looks very nice. And why am I buying this? Because this company has 4 times leverage to the gold price at a very cheap all-in sustaining cost. And it has growth. So it's only at 600 tons per day now. They could go to 1,000 tons per day at a very low capex. So production can rise in the future. I like that. So here you have the EV to free cash flow. It's probably going to go to around 3, very cheap. The NPV value is okay. It's higher than the enterprise value, but what you need to know is the leverage. So let's say we have gold going to 2,200. That's a 10% increase. Okay, and then we have a much higher NPV. From 80 to 120, that's up 50% upside. But just going up 10% in gold. Let's say we go to 2,500. That's 25% upside in gold. So what do we have then? Look at this. The NPV goes from 80 to 160 million. That's a double. So by going up 25% in gold, that's nothing. You can actually get a double in Mako Mining. based on this NPV calculation with this production and eventually going to 1,000 tons per day, then I add 50% to that. So yeah, high leverage, low cost, and growth. Look at the EV to free cash flow at that point. 3 to 2 PE ratio. So very cheap if gold goes up, of course. And that's what we need to do. We prepare for a rise in gold to 2,500 and we leverage ourselves up with these cheap gold miners. So that's what we do. This is a discount rate of 10%. If you do a discount rate of 8%, it's even better. 200 million NPV. Some even use 5% discount rates above 200 million NPV. So plenty of upsides in a rising gold price environment. Now let's take a look at news release. They had a news release today for Q3. You can read it all. Basically, it just tells us what I have given here. Look at the production numbers here. But what I want to emphasize is this here. The mill feed is expected to increase. Okay, that's important. Also important about Q4 is that gold recovery is going to improve. Yes. They're also going to use more ore from Las Conchitas, right? So currently they only have 80% of it is from the West Pit and 20% from Las Conchitas. But now they are going to extract high-grade material from these two deposits later this quarter. And this is considered to be the best part with low strip ratios and higher grades. So in Q4, we are going to see an improvement. So that's what we're looking for. Production is probably going to increase. And we also will get a maiden resource estimate for that deposit that they are now mining. Let's see how much gold they will find there. They did drill around 80,000 meters on that new resource. I expect this to be around 400,000. It could be lower, it could be higher, I don't know. But that's the number that I have in my head. So that will give us plenty more years of mine life, at least these 7 years. Okay, and they are doing a lot of exploration. Exploration is around 8 million now, but they will ramp it up 12 million, 15 million probably in the coming years, depending on the gold price, of course. And good production, good gold mine, high grades. So let's see what this will do. I am a shareholder and expect this to go at least back to where it came from. Maybe not this high, but at least to $2. Okay. So that was the update, and I'll see you next video. Bye.